Hi, Professor Morgan-Nance here with a brief discussion of how to use the allowance for doubtful accounts. Think about the bad debt process as having three main steps. The first step is to estimate bad debts at the end of the period. You estimate bad debts at period end to match this cost of making credit sales with revenues. You will estimate bad debts using one of the allowance methods. The ones we've talked about in class were the percentage of sales and the aging method, the aging of AR method. There's also the percentage of receivables method. Let's say the entry you have to record to recognize bad debt is equal to $1,000. You debit bad debt expense and credit the allowance for doubtful accounts for $1,000. Notice that you're reducing net assets by $1,000 and reducing net income by $1,000 because you're increasing expenses. This is the only time you'll make an entry to the expense account. The second step is to write off a bad debt. When you determine that a customer is not going to pay and you write off their account receivable balance, you don't record bad debt expense again. This is a beauty of the allowance method. You record expense only once. You estimate it in the period in which the sale was made. So let's assume XYZ company owes us $250 and doesn't pay. When you determine that XYZ company's receivable won't be collected and decide to write it off, you just debit the allowance for doubtful accounts instead of debiting bad debt expense, and then you credit the customer's accounts receivable. Notice that this entry has no effect on total assets and no effect on expenses either. It's a beautiful thing. And finally, let's assume for the third step that the customer feels bad and decides to pay. Remember these steps: reverse and collect. You don't record an entry to bad debt expense again. You just reverse the entry you made in number 2 to write off the account. In other words, you restore the accounts receivable with a debit for $250 and credit the allowance for doubtful accounts for $250. Then you process the collection of the cash like you normally do, with a debit to cash and a credit to accounts receivable for $250. Easy. And that's it for now. See you later.